What's going on, my fellow wealth creators? Matty Ice here. Welcome to another training. Today, I want to break down some pretty awful and extremely misleading social media content around becoming your own bank and the infinite banking concept, which I'm a huge fan of. I think it's a really, really powerful financial strategy. I implement it in my own life right now. I do it the right way, though, not with indexed universal life. That's what I see a lot of this content trying to sell and promote, and they're using the power of the original infinite banking concept, utilizing dividend paying whole life insurance. Of course, they don't talk about that, but they're trying to sell you on the idea that you can implement this powerful strategy with indexed universal life. And hey, if you want to try, go for it. You want to believe all the hype, go for it. I almost did. I almost purchased an IUL. The thing is, though, when you actually learn how these products work, you see that you quickly realize that they are a fundamentally flawed and very risky product, not designed for anything like the infinite banking concept. And it's just very concerning to me to see this type of content out there. People are commenting on it, and they're probably reaching out to learn more about it and stuff. And a lot of people are going to get hurt by these products. And it's just, it's really frustrating to me. And I want you guys to be careful. I want you to know how these things actually work so you can make the best decision for yourself. There's just a lot of things that can go wrong with IUL, especially when you have large outstanding loan balances, which is frequent or common when you're implementing the infinite banking concept, because you're often utilizing your policy to build wealth. That's how I'm using it. But the difference is with dividend paying whole life insurance, it's guaranteed to grow every single year. Plus you get dividends. With IUL, if you have 1, 2, 0 years in a row, and you have a pretty high outstanding loan balance and your cash value, you don't have enough cash value left to cover the interest cost, the cost of insurance, other fees within the policy, you could run the risk of lapsing it. There's ways to manage that. I'm not saying that's always going to happen, but like, why are we rolling the dice with our hard-earned money here with something that can blow up in our face? All these different things that can go wrong. With dividend paying whole life insurance, it's guaranteed to grow every single year. There's no volatility. It has nothing to do with the stock market, and it just it's the asset that was intended to be used for the infinite banking concept. All right. So I just want you to know how these things work and just be careful, like what the content that you're listening to. Kind of brings me to my next point. The other thing that I want to bring awareness to is the type of people that are promoting this. Are they people that are open to having dialogue and discourse, going back and forth with people they disagree with, or are they censoring them, deleting comments and blocking them because they don't agree with their narrative? See, I personally think that an open debate with people you disagree with is actually really beneficial for the audience, because now you can see both sides of the argument and they can make a decision on what makes sense. Okay, so what this person is saying makes sense, what they're saying makes sense. Okay, and it helps people make a much more informed decision about what is going to be best for them. But when you start censoring that and you start deleting comments and blocking people, like I'm going to show you with one of these influencers, that should raise a really big red flag. What are they hiding? Like, why don't they just address what we're saying? If I'm wrong, then you should be able to prove it. And, I have an open policy with my channel with people that disagree with me. Like, hey, you want to come onto my channel and have a debate and have a productive conversation about this? Let's do it. I'm okay with people disagreeing with me. And like I said, I think it's productive for people to hear that back and forth so that they can make an informed decision. And I wish I saw more of that in the beginning when I started going down this rabbit hole, because I almost purchased an IUL because a lot of the content that I saw just talked about how amazing IUL is all the time. But rarely did I see content around all of the things that can go wrong with an IUL, how it works, the risks involved. It doesn't necessarily mean that you can't do an IUL or shouldn't do it, even though I would never recommend it. Most of the time when you actually understand how they work, you want nothing to do with it. That was my case anyways. And but I wouldn't have come to that conclusion if I hadn't heard both sides of the argument. And I want to show you guys the type of people that we're dealing with here sometimes, and just so you can be careful who you're getting your information from. All right. So let me share my screen. I want to start with that first, because it's just very concerning to me. Like, if you believe in this so much, you should be open. Like, you should expect people to disagree with you and be able to have a back and forth conversation with them, unless unless you're hiding something. I don't know. So this person here, Liz Does Biz 101. This was on Instagram, and this was a video that she did, and she clipped out part of Garrett Gunderson's video talking about the power of cash value life insurance. It's extremely misleading, which I called her out on, because Garrett Gunderson, which I highly recommend you check out his channel. He has some really, really good content about really powerful financial principles. He does talk a lot about dividend paying whole life insurance and utilizing it as your own, like to take back some of the banking functions in your life, etc. So she decided to take a couple of clips of one of his videos and promote IUL with it. Well, I called her out on it, saying that, you do realize he's talking about dividend paying whole life insurance in this clip. Like, he says cash value life insurance, but I know Garrett Gunderson's content. He is not a fan of IUL at all. You can go to his content and confirm it yourself. He's talking about dividend paying whole life insurance, not indexed universal life. Garrett Gunderson hates IUL, and using his content to promote it is extremely misleading to people. I stand by that statement. That is very misleading, because if people were to actually go to Garrett's channel and watch some of his videos talking about IUL, they would never want what she's promoting here. It's very, very misleading. But the way she created the video, it sounds like he's promoting it. Very, very misleading. And I just want to show you guys, I'm not even able to search for her profile anymore. Like that piece of content, that link is gone, at least for me. It's not available. It might be broken. Page may be removed, blah, 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 whatever. She blocked me. She deleted my comment and blocked me. So there's no open dialogue. There's nobody on her page, or that people can see anyways, on that particular post disagreeing with her. That is very concerning. Why would she do that as opposed to having a back and forth with me? I don't know. So just be careful who you're following, guys. All right, next. Let's break down some good old TikTok stuff. All right, becoming your own bank using insurance. All right, let's have some fun.
If you're keeping all your money in the bank, stop. The average interest rate in a savings account is sitting at 0.01% interest. With the rate of inflation being 3.2%, you're actually losing money letting it sit in the bank account.
Okay, so I actually agree with this. Having it sit in the bank, I don't think is a very good idea. And I actually moved a lot of my money out of the banking system into these dividend paying whole life insurance policies. Once I understood how they worked, they just kind of became a no-brainer to me. But I did this for a couple of reasons. One, like he's saying, I mean, what is your checking or savings account paying you? Maybe it's paying you a little bit right now because interest rates are high. But oftentimes when we have money sitting in the bank, it's literally doing nothing for us. So why not move that money into an asset where we're going to have access to the majority of that money anyways, which you do with these policies. You can take a policy loan. It's in your account in 2 to 3 business days, and you can use it for emergencies, opportunities. I use it for wealth building opportunities right now. I purchased my vehicle with it. I consolidated my mom's credit card debt. I used it. I'm using it to flip equipment, private money lending, all that stuff, right? So if I have access to the majority of that money, why would I not want to put it into an asset that is going to get me the most amount of benefits? 3 to 5% tax-free compound growth for life. Does your checking or savings account do that? No. Dividend paying whole life insurance does. They typically net 3 to 5% tax-free compound growth. Plus you have the death benefit. So if something were to happen to you, your loved ones would be taken care of financially. You have living benefits. So if you were to be diagnosed with a chronic, critical, terminal illness, you would be able to access a large portion of that death benefit early to get whatever kind of care you want. Does your checking and savings account do any of that? So if I told you there was a savings account down the street that was going to give you 4% tax-free compound growth for life, and you could use the money for emergencies and wealth building opportunities without interrupting that compound growth, would you be interested? If you said yes, then you should absolutely consider a dividend paying whole life insurance policy. The other thing, though, is we're getting our money out of the banking system. I don't know about you guys. I don't trust Wall Street. I don't trust government. I don't trust banks whatsoever. If you look at the history of banks, they have a terrible track record of safety. We assume that when we want to save money, we should put it in the bank, right? That's the safest place to put it. When you actually look back in history, go back to the Great Depression, savings and loan crisis, 2008, pandemic, whatever. While all of these banks were, guys, 8,000 to 9,000 banks failed between 1929 and 1933. while the banks were failing, these mutually owned life insurance companies, which is who we buy these dividend paying whole life insurance policies from, were paying dividends to their policyholders. While the banks failed, life insurance companies were paying dividends to their policyholders. To me, these are far safer companies to have my money with, large amounts of money. I still have money in the bank for expenses, small emergencies, things like that. But my safe money, my emergency money, my opportunity money, my working capital, that I've moved into these policies because these companies, I mean, they're the best risk management companies in the world. Some of them have never missed a dividend payment in 146 years. So while all the banks were failing, they were paying dividends. So safety plus all of the other benefits that we're getting, it just makes sense to a lot of the time, not for everybody, but to move our emergency and opportunity money into something that's going to give us more benefits than a crappy checking or savings account. So I do agree with that. So let's get back to it.
Banks don't even keep their money in savings accounts. They invest into cash value life insurance.
Okay, they invest in whole life insurance. Okay, I seriously doubt banks invest in index universal life. If they do, it's minuscule compared to the amount of whole life insurance that they have. Guys, index universal life didn't come onto the scene until 1997. Banks have been buying whole life insurance. It's called bank-owned life insurance long before IUL ever came out. Okay, because it's their tier one capital. It's extremely safe because these life insurance companies are so financially solid and they're the best at risk management. It provides all, like, you can do so many things with these policies. There's a lot of executive retirement plans and pensions and all that stuff they use it for. Seriously doubt they're buying a ton of index universal life. They're happy to sell index universal life because it's very profitable in various different ways, maybe not directly, but yeah, I seriously doubt they're dumping a ton of money into IUL. But see, what they're saying is cash value life insurance, which is a half truth because IUL is technically cash value life insurance because you can build cash value with it, right? But so is dividend paying whole life insurance. They both build cash value. So which one is it, right? There needs to be a clear distinction here. I think it's really misleading to say that when banks have been buying dividend paying cash value whole life insurance for decades, and now you're saying you're trying to twist it to sell IUL and make it sound a lot better than it actually is. I seriously doubt banks are buying a ton of this stuff. So just be aware of that, guys.
If you're looking for a safer alternative as well as a better return of investment on your money, then an index universal life insurance policy may work perfect for you. The IUL is the safest investment vehicle in the market right now.
So first off, it's not an investment. From a compliance standpoint, I'm not sure how he gets away with that. It's life insurance. It's not an investment. To sell investments, you have to have a completely different license in order to do that. So selling life insurance as an investment, extremely misleading. Not to mention, he's calling it the safest investment vehicle right now. Really? Really? Okay. So here's the thing, guys. There's not typically a lot of issues with IUL in the beginning years, but when you start to utilize the policy for what they tell you you can utilize it for, which is primarily tax-free retirement income later, you know, they're probably going to talk about using it for infinite banking, build wealth, whatever. But IUL is primarily sold as this amazing tax-free retirement vehicle. When you start taking income, when you start taking policy loans against that, against your IUL, when you're older and you rack up a pretty good loan balance, you're not making premium payments anymore. Your cost of insurance is going through the roof. Maybe your net amount at risk is manageable right now. But when you rack up a really high loan balance, and this is the scenario I always present to IUL agents, and they never answer it, is if you have a $500,000 loan balance at a 5% interest rate, okay, and you have a 0 year, so zero's your hero, right? You have that zero floor. Where does the $25,000 of loan interest come from? Your cash value. So you can absolutely lose money in an IUL. Talking about it like this, it's the safest investment vehicle because you can't lose money in the market. You can lose money because of the market not going up or because of the market going down, because there's cost of insurance. There's other fees that you have to pay into it. And again, it's not really an issue in the beginning years. It's later on down the road where these things can really blow up in your face. So just please be careful, guys.
now. You have a 0% floor. What that means is you can never lose your money on this policy, no matter how volatile the market becomes.
Oh my God, that's so misleading. I hate when IUL agents say that you can never lose money. I just told you how you can lose money. One of the ways you can lose money is if you have a 0 year when you're older and you've racked up a loan balance, taken the tax-free retirement income from the policy, you will lose money. You will lose money anytime there is a 0 year in the policy because there's costs associated with the policy. And here's the thing, guys, IUL is built on what's called annual renewable term. That means your cost of insurance gets more expensive every single year, and it gets more expensive exponentially when you are older. Term insurance is extremely expensive when you're older. When you hit 65, 70, 80 years old, you're taking income from this thing. You're not making premium payments anymore. You better be careful. You better manage that thing like a hawk. And when you hear stuff like this, you can never lose money in an IUL. Run the other direction, guys. You can absolutely lose money in an IUL. That's such a ridiculous thing to say.
Plus, you're building anywhere between 6 to 12% compound interest annually.
Wrong. Man, there's just too many. I'm having too much fun with this. Again, you can't get true uninterrupted compound interest in an IUL. You know why? Because the market doesn't go up every single year. When you see an IUL illustration showing you 6, 7% every single year, that's extremely misleading. That is a policy based on the performance of that policy is based on the stock market, call options. We don't have an eternal bull market, guys. The market doesn't go up every single year. So you don't get compound interest annually. And when he's saying 6 to 12%, that's a pretty big spread too. Can we get a little bit closer there? What are we talking about? All right. But you don't get true uninterrupted compound growth in an IUL like you do dividend paying whole life insurance. There's just too much volatility. It's based on the stock market. It's just not going to happen. I'm not saying you can't have good years in an IUL. All right. But it's just the way that this product is misrepresented is what really, really aggravates me. Because when you hear you can get 6 to 12% compound interest annually, really every single year, I'm going to get 6% on a stock market product. Do we really believe this, guys? That's just ridiculous.
And it's a life insurance policy.
Here at Financially Fluent, we have over 100 licensed agents in all 50 states ready to assist you at no obligation. Click the link below so we can help you become fluent
in all things financial.
All right. Yeah. Just a complete misrepresentation of the product. Absolutely ridiculous. This one wasn't too bad, but there's a couple of things that I wanted to bring up just for clarity's sake. He's not completely overhyping IUL. He actually talks about whole life. He says you can set it up with whole life or IUL, but there are a couple of things I wanted to address here.
3 steps to becoming your own bank. Step number 1, you have to get a properly structured permanent life insurance policy that builds up a cash value fast. So that's either going to be whole life or index universal life.
Okay, no, it's only going to be whole life. You don't use IUL for becoming your own bank. Again, you could try. You want to roll the dice, be my guest. I highly advise against it, though. It's not a good idea. Also, when he's talking about setting up a permanent life insurance policy, the only real true permanent life insurance policy is whole life. See, IUL is technically, by industry standards, I guess, a permanent policy because it doesn't have an expiration date like a regular term policy would. If you bought a 10-year, 20-year, 30-year term policy, it expires. As long as you make your premium payments on an IUL, it will be there permanently. What happens when you can't make the premium payments, when you don't have any cash value left and it's on the verge of lapsing and the whole thing is just blown up in your face because you've taken too much income? Now you have 0 years, $20,000, $30,000, $50,000 of interest that are due. What do you do then? The fact that the IUL can blow up because of these things means it's not true. It's misleading to say that it's a permanent life insurance policy, in my opinion. I like to bring that up anytime somebody says permanent life insurance and they're talking about IUL. Just be aware that there's not really, it's a half truth. Okay. Because if you don't manage that IUL really well, it can lapse. It can cause, there's a lot of things that can go wrong with it. And all of a sudden you realize it's not permanent anymore. So just be aware of that. Oh, and he said cash value fast. Let me talk about that really quick. A lot of times you don't get access to very much cash value in an IUL. I think there are like riders you can purchase, which there's additional fees for it that waive or reduce the surrender period of an IUL. So you get access to cash value faster, but that's going to put more drag on the policy as well. So it's pros and cons. Talk to your agent about it. But typically an IUL has like a 10 to 15 year surrender period. So you don't get access to a ton of cash value in the very beginning. With dividend paying whole life insurance, when you custom design it, you can have access to a ton of cash value, 85 to 90% of the money you put into the policy on the first year. You can have access to that within the first 30 days. That's how I set my policy up. I put $120,000 in for the first year. I did a large dump in. I do $25,000 per year after that. But in the first year, I have about $105,000 of cash value that I can borrow against in my policy. So really, really efficient. When you custom design them, you can get access to a ton of cash value in the first year. All right, let's go back.
Whole life, you want to get what's called a paid up addition rider, which is going to allow your cash value to grow faster. And you also want a term blend that's going to take about 70% of the commission away from the agent. And it's going to go into your pocket. Step number two.
Okay, so he's about like 80% correct there. So you definitely want paid up additions, and that it does accelerate the cash value. It's how I set my policy up. It's how I set all of my clients' policies up. So he is correct on that. Paid up additions is really good for accelerating cash value. There's really two places you can put money in a policy. It's the base premium, which would include the term policy as well. And then the rest goes into paid up additions for higher cash value. The term blend, though, the term insurance policy that gets added on top of whole life is really meant to make sure you don't mech the policy or make it become a modified endowment contract, because when you do that, you lose all the tax advantages, which we don't want to do. So we add a term policy on top of the whole life policy to artificially raise the death benefit up to the mech limit. All right. It's typically on the policy for about 7 years and then it falls off. Some people want the death benefit for longer, so you can put that term policy on for 10, 20, 30 years. But when we're talking about a blend, it's a base premium and paid up additions blend is usually how you're custom designing the policy. So just to get the terminology straight there.
Number two, if you do get the index, you want to make sure that you're using a company that can get you a cap of at least 9 to 10%. The reason why, if it's 10%, if the market goes up by 5, you can make 5. If it goes up by 10, you can make 10. If it goes up by 15, the most you can make is 10, but you can't lose on the downside.
Okay, that's generally true. You how an IUL works. You got a 10% cap, market goes up 10%, even though that's a gross rate. You're not always going, like, just because you get 10% interest credit to the account doesn't mean that's what your cash value actually grew by. So you want to, there's a big difference between interest crediting and what your cash value actually grows by. That's it's very important to manage those expectations. Okay, and when you can't lose money on the downside, you can't lose money directly in the market. But again, if you have a 0 year, there's still costs and fees associated with the policy. God forbid you're 70, 75 years old and you're taking policy loans every single year. Now you have interest on top of that. That you can absolutely lose money in an IUL in that scenario.
Number three, once you build up enough, you can borrow against it. When you borrow against it, you can use that money to either pay off debt or you can use that money to create wealth. If you use it to pay off debt, you're going to put some of your paycheck into the cash value life insurance policy. Then you're going to borrow against it. You can pay off your debt almost twice as fast while your money continues to grow tax-free as if you never touched it. And the last and final bonus.
So real quick, all of that is correct. Again, I wish he would toss IUL and focus just on whole life, because he actually is sharing some good information here. It's one of the powerful things about life insurance is being able to access the cash value to do things like pay off debt. You can absolutely pay off debt twice as fast. There's some really great debt elimination strategies that you can implement with cash value. Again, whole life cash value, whole life insurance. All right. So he is providing good content right there. Good information. I just wish he would get rid of the IUL stuff. Then it would be money.
This step is to make sure that you get a mentor and a good advisor that can help you. Check me out. I'm Marvin Mitchell, and I cannot wait to help you.
All right, cool. So overall, good content. Just some things to clarify about like the difference between whole life, IUL. Just important to go through that. Oh man, this was a fun one. Let's see. Oh yeah, this is when I tried to look up the that other content creator and doesn't show up anymore. I am blocked. Yeah, that's fun stuff. Okay, so but this is an example right here of what this lady did right here with Garrett Gunderson's content. This gentleman, Austin Becker, is doing with Mr. Burr. Again, he clipped out a very specific part of Mr. Burr's video here talking about cash value life insurance in order to sell his crappy IUL. Even though Mr. Burr, again, if you go to his channel, great content. He loves the infinite banking concept, uses it to invest in real estate, but he uses dividend-paying whole life insurance. He hates IUL. He actually purchased an IUL. It was a disaster. Small price to pay for the lesson, I guess, but he can't stand IUL. And yet here this guy is using his content because Mr. Burr is pretty popular online, got tons of followers. He has that. He's an authority figure, I guess you could say, in the industry. He's trying to utilize his content to promote IUL, even though Mr. Burr hates IUL. It's extremely misleading. So let's have some fun with it. Let me refresh to start from the beginning.
You're supposed to use life insurance while you're alive.
It's called life insurance, not death insurance. Let me show you why. So imagine your life insurance policy is a house. You see, every time you make a payment on your house, you build equity in the house. You can then use that equity for whatever you want by getting a home equity line of credit. See, but life insurance is way better. Check this out. With life insurance, when you put money in, you build equity in the form of cash value. That cash value is guaranteed to grow 100% tax-free. The money's protected against judgment and lawsuit in most states. You can access the cash value at any time for whatever you want by taking a policy loan. But unlike your house, there is no credit checks required. There's no financial statements required. Unlike your house, there's no repayment terms required. You can take the money and buy a car, go on a vacation, or do an investment to make more money. And the whole time you're doing this, you're not interrupting your guaranteed compound growth.
Yep. That was actually an excellent description of infinite banking, dividend-paying whole life insurance, etc. I've used my policy to purchase a car, consolidate my mom's credit card debt. I have done investments with it. I just flipped my first piece of heavy equipment. It's very similar to flipping real estate, just with heavy equipment, right? And I'm using my policy for that. And it's awesome because I can, while I'm using my policy to do those things, I'm not interrupting that tax-free compound growth. Let's break down the description here in his video. It's just extremely misleading. Again, he's saying benefits of cash value life insurance. Okay, what type of cash value life insurance are we talking about, though? What type was Mr. Burr talking about? He was talking about dividend-paying whole life insurance, but he's not going to say that. He's not going to make that distinction in the caption here or the description, because then you wouldn't buy his IUL. He's going to try and position this as if you can do that with IUL, which technically you can, but you're taking a lot more risk. There's just so many things that can go wrong with an IUL. They will average 6 to 10% rate of return with guaranteed protection from stock market crashes. This means they will never lose money. I'm going to screenshot that. Let's see, where am I at here? You know what? I'll do it later. Well, I'm doing the video too, but I like to have screenshots because I build up like a database of some of the just most ridiculous things that I hear IUL agents say. Guys, I've already explained to you a couple of times now how you can lose money. Like, look at this. From a compliance standpoint, from a legal standpoint, I don't know how people are able to get away with this. Like, if the compliance department of the IUL company that this person is contracted with saw this, I wonder what they would think about this. This means they will never lose money. Oh, really? So there's no cost of insurance. There's no admin fees. There's no whatever other fees that are involved with IUL. There's so many different things you can do with them that always come with costs and fees. All right, but really, you can never lose money? Again, I throw out this question to IUL agents because they always talk about tax-free retirement income right here. They will have a tax-free retirement income that they can turn on to pay them for the rest of their lives. Really? Okay. So, and IUL agents will illustrate just ridiculous amounts of distributions from an IUL, 8 to 10%. Like most of the time, you talk to any financial advisor, and if you were to ask them, like, what's a conservative percentage rate of my portfolio that I can take on an annual basis to make sure that I don't run out of money in retirement? They're going to tell you 3%, maybe 4%. It used to be 4%. I think it's dropped down to 3% now. These guys are telling you can take 8 to 10% in retirement from these things, because it shows, when you look at that illustration showing that income, it shows the policy growing every single year uninterrupted, as if we're in some kind of eternal bull market. So, Mr. Austin Becker, I would ask you, when your clients are taking out all that income that you show them they can take, and it looks really good on paper, and they're 70 years old, and they've done that, they've taken out $100,000 per year for the last 5 years. They have a $500,000 loan balance. The interest rate on that loan is 5%. That's $25,000 of interest that is due. And there's zero credit that year because the market does not go up every single year. Where does the $25,000 of interest come from? Where does the cost of insurance come from? Where does any other fees associated with the policy? Where does it come from? Because they're not making premium payments anymore in retirement. It comes from the cash value, which means you lost a crap load of money that year. See, not a big issue in the beginning when you're not taking income and you're not old yet, so your cost of insurance is very low. But when you're older and you start doing this, tax-free retirement, this thing can easily just blow up in your face, guys. Just, this is so frustrating. So when you see this, never lose money, wrong. Dude, report this to their compliance department. Call up the compliance department of the company that they represent and ask them, like, am I really never, like, is my IUL never, ever going to lose money? See what they say. They can access their money tax-free. That is true without penalties. I mean, there's an interest cost, but there's no penalties or anything like that. Life insurance has tons of, like, just awesome tax advantages. So that part is true. They have... Wow, look at this. Uninterrupted compound growth. That's just a lie. It is a straight up lie. You cannot get uninterrupted compound growth in an IUL, and a product that is based on the stock market, because the stock market doesn't go up every single year, guys. And I've seen some agents say that there's a guaranteed 1% or 2% floor. Maybe in the first part of the accumulation phase or parts of the accumulation phase of the IUL where it's growing, you're 30, 40 years old, whatever, your cost of insurance is manageable. But what happens in the 0 years where that 1% is not going to cover all the costs and fees associated with the policy? You're now interrupting that compound growth. You've actually gone backwards, which is the opposite of uninterrupted compound growth, because now you have to get back to break even and then resume the growth process. That's not uninterrupted compound growth. The only vehicle that I'm aware of that you get true uninterrupted tax-free compound growth, dividend paying whole life insurance. You just can't, there's nothing that compares to it. So this is a straight up lie. This is what allows them to become their own bank. Yes, you are correct. It certainly helps anyways. The uninterrupted compound growth, where our private banking system is going to grow every single year in a dividend paying whole life insurance policy. Yes, that is a very important part of the infinite banking concept. We don't want to be taking policy loans and using our policy to build wealth, but then have our policy go down in value because of stock market, the stock market not going up every single year. Granted, you might not participate in the downside of the market going down, but there's still cost, fees, interest costs associated with implementing this strategy with an IUL, and you can run into a lot of problems with it. They can borrow the cash on the policy without interrupting the growth, leverage, blah, 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 blah. All right, tax-free retirement, they will be protected with a, again, permanent life insurance death benefit. If the policy lapses, is it permanent? No. And then I hear IUL agents say, well, there's a no lapse guarantee and loan protection riders and blah, 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 blah. That doesn't fix the problem. I've talked about this on my channel. It's like, if you have to use any of those riders, it means your policy blew up and it still failed. Okay, maybe you can prevent it from lapsing, but now your death benefit is next to nothing. You have your cash value is next to nothing. So the policy is useless at that point. So it doesn't do anything. Is it really permanent? It's a half truth. Very misleading. It can be set up for anyone at any age. As I would absolutely disagree with that as well. Any age, like if you're older, I don't see why, like, any reason whatsoever to set an IUL up for somebody that is older, unless you're specifically just using it for the death benefit, maybe, but that's not how these things are sold. It's always the tax-free retirement income. You're never going to lose money, blah, blah, blah. It's just ridiculous. Properly structured, most of these are not properly structured. And even when they are, there can still be massive problems later on down the road when you start taking those loans for income. So if it's max funded with the least amount of death benefit, can it reduce the risk? Absolutely. Still, are we rolling the dice here with our financial future, guys? Like, what are we doing here? So let's connect. Okay. Yeah. Don't comment bank, please. Like, just stay away from this crap, guys. It's just horrible, horrible advice. It's so misleading. The video is just, everything is completely out of context. He doesn't tell you that Mr. Burr is actually an advocate of dividend paying whole life insurance. He's just using his authority, you know, in the space to promote his crappy product. So it's really frustrating. I just want you guys to be careful. Please, please, please be careful. All right, so I will have some additional resources down below, some additional training on infinite banking, how I'm using it in my life, how I set my policies up and all that stuff. Please check that out. If you have any questions, I'll leave a link down below too to book a call with myself or my team. If you want to have a discussion about infinite banking, if it makes sense for you, maybe you already have an IUL policy, unfortunately, and you just want to see how it was structured, make sure it's what you were expecting. Right. We do free IUL audits and reviews as well. So whatever whatever you need for us to help you, it's down in the description. All right. So I appreciate your time, guys. I hope you're crushing it, and I will talk to you in the next one. To your success, Matty Ice is out.